The figures.
Sorry, the reason I'm reacting badly there is we were just talking about figures in relation to the retail market, and apparently there's bad news, but it's still at an early stage, so we will leave it until there's more data. The person who's telling me this is Dr. John McCartney, who's an economist. He's also director of research at Savills, and what he's here to talk about isn't retail figures, which are apparently potentially going down, but rental figures, which are going up, and going up fairly fast, it would seem.
Absolutely, Anton. When we talk about the Dublin office market, what we see is that headline rent, that is the contracted rent that everybody talks about, has gone up very sharply, about 24% in the last 12 months. But what we have done is we have analysed some of the sweeteners that go with these rental deals to see what's been happening there. And that's where the story gets really interesting.
So things like rent-free periods at the outset and all that?
Absolutely. It's custom and practice for landlords to offer some amount of rent-free at the beginning of a long lease. And over the last 12 months, that rent-free period has probably halved on average. And there's quite a lot of variation by location and between the quality of the buildings and all that sort of thing. But fundamentally, these sweeteners, these incentives have slowed down.
And when you net that off, presumably that makes a significant difference to the rents and makes them have increased even more.
Yeah, well, absolutely. I mean, 12 months ago, what we were seeing was that for a commitment of, let's say, 5 years, that is a 10-year lease with a 5-year break, for example, you might have expected to get anywhere up to 12 months rent-free. Bring that forward to this year, and that rent-free period is halved to about 6 months.
Now, this, of course, is within the commercial and the office environment. Are we seeing similar rises in residential? Are the two in any way connected?
Not really. I mean, the structure of commercial leases is such that you're talking about longer leases. So landlords are more prepared to do a deal like this because they know that they'll get the money eventually over a 10-year lease, whereas residential rents are typically 1 year only.
Is it positive or is it negative? Because presumably on the one side it shows a market that's recovering, on the other it shows increased cost on businesses.
Yeah, that is exactly the dilemma. It certainly does indicate that the market has tightened very considerably, and that of course is related to jobs growth, and particularly in two sectors actually, that is ICT, where jobs growth in Dublin has really been strong, and also in professional services, the likes of solicitors and accountants and things like that. So in that sense, it's a good news story. The other side of it, of course, is that office space is a factor of production, and it goes onto the onto the cost side of businesses' accounts. And also, I think there is a concern that unless we start building more office space, eventually we'll get to the point where foreign direct investment won't have enough office space to accommodate projects that might want to come into Ireland, and we want to avoid that at all costs.
Is this another one of those stories where people in Limerick, Galway, Cork, Waterford and rural Ireland will be saying, Dublin is on the increase, things are looking bright there, not so anywhere else?
Well, I think certainly in the Cork market, the office market is hotting up as well. The office markets in the other major urban centres that you mentioned there are smaller office markets, so it's not really, I suppose, comparing like with like. What we may see in time, however, is that as multinationals come into Ireland, maybe they will be diverted to the regions because of insufficient space in Dublin, but I think there's still quite a bit of vacant space in suburban markets that'll be eaten up first.
Vacant space held currently by developers, held by NAMA on the market. Where is the land going to come from to facilitate the building that you describe as being needed?
Well, in suburban markets there is already space that's built and vacant. So in some suburban markets around Dublin, for example, the vacancy rate even today remains at over 30%. So there's huge variation by location.
Why is that not depressing the rent prices then?
Well, it is in the suburban markets where the rate of rental growth has been much slower. But then if you go into the traditional CBD, the Central Business District, Dublin 2 and 4, what do we find? We find that the vacancy rate is currently around 4%. So there's really no vacant space. space at all when you get to the best grade A modern buildings.
You described it as being driven predominantly by ICT and by professional services. Are there other facets of industry that are driving factors in that as well?
Well, absolutely. There are a whole range of occupiers in the office market. One of the big ones, of course, being the public sector. The situation in the public sector is that there hasn't really been any impetus of growth coming from that source for a long time, and we wouldn't expect it in the future. But as industry begins to recover, manufacturing industry also is a taker of office space. So it's across the board, but these two, ICT and professional services, are the standout occupiers at the moment.
We mentioned anecdotal evidence of potential negative impact of things like good weather and World Cup distracting people from retail and therefore hurting footfall. What about retail in relation to office space? Is there light at the end of that tunnel?
Well, the retail market's a slightly different animal. Firstly, I should say that retail rents represent a much bigger part of the cost base for retailers than they do for office occupiers. So there is that factor there. Also, while we see that the retail market has improved, generally retail sales up about, I think, 8% from memory in the most recent figures. So there is an improvement there, but they're coming from a relatively low base. And with, of course, fiscal austerity facing us for the immediate budget, and realistically, I would say, for a number of budgets beyond that, I think we cannot expect a big bounce back in the consumer economy. So retail rents are more subdued.
Briefly, John, in relation to the development that you describe as being required, does that need anything in the way of legislative change or stimulus, or will the market look after that itself?
Bit of both. We have seen that the strategic development zone has been passed down in the Docklands, which opens the door, I suppose, for fast-track development of office space in that location.
That's where Irish Glass Bottle and Fabrizia, those two sites, is it?
Well, not specifically those two sites, but in this, the Docklands area, there's a very clear designated area, and there's a sort of an arrangement for fast-track planning there, which will be very beneficial in delivering space, which is really important because that's where a lot of multinationals want to locate, in Silicon Docks. So that is great. In terms of the organic encouragement of development, what happens is once rents go to a certain level, the implied capital value of a building exceeds construction costs, and that gives the green light for for development to go ahead, and we expect that over the next 18 months.
Dr. John McCartney, thank you very much. That is Dr. John McCartney, who is an economist and director of research with Savills. 53102 if you want to get in touch. We'll be back after this break.
The last word.